Hey, good Thursday to you, everybody. This is Lee Goss coming at you again from the offices of EFG, IFG here in Chicago. And it is Thursday, which means it's Numberology Day. But hold on, we're going to do something a little bit different today. We're going to talk about a very specific commodity. We're going to talk about what trend it's in, what it is needed to reverse that trend, and then Steve Erdman, my partner, will come in and give you very specific suggestions of what, in our opinion, you might want to do given this information. And the commodity we want to look at today is December coffee. For those of you that have been following the coffee market, you know that coffee's been in a very long-term downtrend. Over the last 10 or 12 trading days, it has violated the long-term downtrend line, which is putting it at a potential reversal point in terms of the long-term trend that we see. The LAWG 647 Numberology model tells us that if December coffee closes tomorrow at or above 137.40, that the long-term trend indeed, according to the model, will have turned higher. December coffee closed today somewhat above 140, but just shy of 141. So it is already above that reversal point, which makes tomorrow a very, very critical day. Now, what happens if it does not violate the 137.40 trend turning point? Next week or next Friday, the critical price is 134.40, and the week after that, should they fail to close above 134.40, is 130.10. So as you can see, the critical price levels are getting closer and closer to present values, then should make it easier and easier for the trend to turn. Now, it doesn't mean it will, but it does certainly put it in a much stronger position starting tomorrow and several weeks in front of that. Now, having said that, what should you do with that information? Well, my partner, Steve Erdman, will now come on and give you very specific ideas and suggestions of what you may want to do given the information that we've just shared with you. So I want to wish you a great trading week. Remember that trading commodities is always risky. And now here's a great guy, my partner, Steve Erdman.
Thank you, Lee. We're incorporating a little bit of chart chatter today with Lee's trends and reversals. So based on the potential for the market to see a trend reversal in coffee, I'd like to point out some points on the chart that I think are really resonance price levels, and they're dictated by some of the vertical lines that I've drawn on this chart, and I've put some obelisks on here also to try to give you an idea of what kind of option strategies we might incorporate to try to take advantage of this kind of move in coffee, because when coffee does move, it's a very volatile market. So saying that, let's go to the chart and take a look at this weekly chart that I've included today, and it goes back to 2010. You can see where the market has held near-term support, and this is a pretty significant move for the market as it broke down from October of 2014 to the current level of 120. You see the first resistance point, and that first obelisk that I put in about the middle of the chart comes in at 148.22. So the most simple thing to look at would be buying 147.50 calls in the December options. Those are going for about 759 points, and that's approximately $2,800 to $2,900 before commissions and fees. That seems a little bit expensive unless you're really committed to risking that kind of premium outlay on a position. The next line that we've drawn in, and you see the resistance that we respected back again in the first quarter of 2015 and back into the beginning of 2013, that 158.36 level. So the 157.50 call is a little bit more reasonable at 500, just over 500 points, and that's $1,900, just over $1,900, $1,901.25 at 507 points. That still might be a little rich for some people to consider, so there's two more strike prices I'd like to suggest as potential. Again, you go back to the chart and you see that the market did have some resonance points at around the 183 to 184 area. So I've shown you the 182.50 call, and that's at 198 points, and that's $742 a contract before commissions and fees. I think that really deserves some consideration. If you'd like to talk about more detailed strategies like bull call spreads, we'd love to talk to you and go over some different alternatives. But for now, we hope that gives you something to consider.